All right. Highlight today is a highlight and a low light, although low lights are highlights if you are honest about them. First thing, and this is a good tip, when you miss a trade, which I did right there, had a big buyer, that's what the purple box is, had a zone, that's what this gray shaded area is. And then what had come out was some shorts that puked at the time. Wasn't this long red bar, but it was the longest bar at the time, that guy. So shorts puke. That's what you want. Less shorts, less buyers, easier chance to go down. A big buyer can't go up. Market gets big buying and it can't go up. Generally means downside's right side. And that's in resistance anyways. Here's the key though. I missed this trade. And you have to make sure you either trick your mind like you caught it so you don't do something stupid next. A lot of times when you miss the sell, you try to buy it looking for it to go back up to where you missed the sell, and you end up having a losing trade that wasn't part of what you were trying to do, and you wouldn't have taken this trade had you taken that trade. So missed trades are oftentimes just really important to document, and yet they're not documented often because you didn't take them. You don't know what you don't miss. Doesn't come out on your statement. You can't really take statistics from it, but you got to know when you miss something so you just keep yourself in check. But I did something on the open normally don't do is I had a trade pretty early on. It didn't really set up. There was just a huge amount of longs that puked right on the open. So I took a shot trying to buy it and got shook out. I think it was right. Well, wherever it was, it wasn't a bad loser, but didn't work. But it might have had something to do with missing this, right? When you take something that you normally don't. So you got to keep that in mind. And then the last thing about this highlight was here was another instance of where it comes into a VWAP. That's this white line. It has the biggest short puke of the session, and it marked the high temporarily for a while. This is all between 8:30 Central, first half hour to like 9. And then at 9 o'clock, something interesting happened. Consumer confidence come out, and it was stronger than expected. It was supposed to be 90. It came out like 101. So not only was it a upside surprise, but it was a big miss. It was a big upside surprise. So when you get that kind of miss on a pretty big number, you expect stocks to rally. Well, guess what? They kind of went up and then they broke. And I thought, hey, weak reaction on a strong number. It's generally longer term bearish. And while it ended up being longer term bearish, it certainly did not respect this move lower than it had right after 9 o'clock. Here was the move lower right after 9. So I try to sell a bit of a pullback, right? And I was a little complacent. I didn't get a qualifier with shorts puking, but I was wrong. Didn't take a big loser. Certainly didn't hold it all the way back up to where it went. But point is that I don't want to say missing this trade caused me to take this. That was different. That's a loser that was, you're supposed to take it. You know, you were supposed to do that marketing campaign. So those are outlays. Losing trades are like business outlays and costs of doing business. But as long as you don't make a trade a monster hole in your account by holding it or adding to it or any stupid things, you gotta, you have to honor the risks that you want to take. But this generally is a good trade, getting on the right side of a market that the fundamentals showed you that the downside was the right side. But guess what? It wasn't. And so instead of taking this thing all the way up with a big loser, you got to know where you're wrong before you get in. And what I often say is manage your risk before you take the risk. Have a safe rest of the session and subscribe to this channel. Don't forget.